European markets trade higher following the surge Wednesday in the U.S. markets, with all eyes towards the European Central Bank, which decides on monetary policy later in Frankfurt, Germany. U.S. futures pointed to a slightly higher open in front of Federal Reserve Chairman Bernanke's speech before the Minneapolis Economics Club at 1 p.m. and President Obama's much-anticipated plan for job creation before a joint session of Congress at 7 p.m. tonight. Chicago Federal Reserve President Charles Evans said yesterday that U.S. economic outlook has clearly deteriorated this year, and the continued softness of economic indicators shows that the headwinds facing the country are even stronger than thought. Weekly jobless claims will be released at 8:30 a.m. as analysts expect to drop 400,000 from the previous week's 409,000. I'm Jill Malandrino, and the morning call starts right now.
Good morning, everyone. Welcome to the Morning Call. I'm Evan Lazarus with T3 Live.
And I'm Jill, and together we bring you the Morning Call. Good morning, Evan. So yesterday in Wednesday's trade, we saw follow through on Tuesday's momentum. The banks actually participated for a change. Gold got slammed, which lends to better equity markets. Let's take a look at what the SPX did yesterday.
Okay. We're actually going to take a look here at the spiders. I think it's it's a better vehicle for us as traders to look at as the ETF for the S&Ps. And the interesting thing here is that we're still stuck in this pattern. We've, pretty much identified the key resistance levels. We are in this bear flag pattern, and as we've said over the last couple of days, although there is some day-to-day volatility and you're seeing some ebb and flow here, the ups and the downs and the large gap ups and the large gap downs, we're really not making any directional progress. Obviously, this pattern technically speaks to lower prices to come. We do need to see it break below this lower boundary, however, for that to happen. That would probably expedite or speed up the rate at which this thing could potentially solve. So we are in very cautious type of mode. Moreover than that, I do want to take a look at it a little more granular on an intraday level, and the reason being is I want to highlight this trade in terms of the gaps. I'm actually going to take my time and go like this. Okay, so the reason I do this is because I've gotten a lot of emails from subscribers about trading the S&Ps, and it's really been defined by large directional gaps. You could see the gap down, these big spaces of white you see, gapping down, gapping up, lots of gaps, but very little directional movement, lots of ups and downs and ebbs and flows. So, we're in the middle of this range right here. I'd be very, very careful about committing any capital, right now, to the long side or to the short side until we get some sort of confirmation in the days and weeks to come. So hopefully we'll see what happens, with Obama tonight and into next week possibly.
Well, I think, again, it's going to be more crucial than ever to stick to your trading plan and to your discipline, because volume is so light that the swings are so extreme. I can't remember in my career ever seeing a market so volatile where you have to be nimble, keep your position size tight so that you can get in and out if you need to do that. We have a lot coming up today. We have jobless claims at 8:30. We have ECB announcement, and then tonight we also have Bernanke at 1:30 speaking today from Minneapolis, and then we have Obama's presentation on job creation tonight, which I don't think much is going to come from it. I expect the GOP is going to knock this one down.